It's only a matter of time until Bitcoin reaches parity with gold. And the irony is that the latest case for it just came from JPMorgan, the $4.5 trillion bank run by Jamie Dimon, who's been one of the biggest Bitcoin critics for more than a decade. JPMorgan's analysts are now saying that Bitcoin is undervalued compared to gold, and they estimate that Bitcoin is trading about $16,000 below where it should be on a volatility-adjusted basis. And with volatility falling to record lows, now just 30% over 1 month, Bitcoin is only about twice as volatile as gold. So based on that math, JP Morgan puts Bitcoin's fair value at $126,000 today. That's a big admission, but let's zoom out. Because if you follow this logic forward, the conversation isn't just about Bitcoin being undervalued, it's about Bitcoin eventually surpassing gold entirely. At today's market capitalization, Bitcoin would trade at $1.17 million per coin if it were equal to the size of gold. And unlike other comparisons, this one isn't hypothetical. Bitcoin and gold serve the same function, store of value. The difference is that Bitcoin does it better. Gold has an inflation problem. Every time its price rises, more gold is mined. The annual supply grows, putting downward pressure on the price over time. And its supply is theoretically infinite. Not only can you mine gold from asteroids, but we have yet to mine a meaningful percentage of the estimated amount of gold within Earth's surface. Bitcoin is the opposite. It's the world's first commodity with perfectly inelastic supply. So it doesn't matter how much demand there is, issuance cannot change. Roughly every 4 years, the block subsidy gets cut in half and new issuance slows down. Right now, miners earn 3.125 Bitcoin every 10 minutes. That's it. That schedule is programmatic and immutable until the very last Satoshi is mined. This is why parity is inevitable, but it will not happen overnight. This is a multi-cycle process that could take years, even decades, as capital shifts away from inferior stores of value and into the superior one. So let's run the math. If Bitcoin and gold simply keep growing at their current 5-year compound annual growth rates, parity arrives in late 2031. That would mean a $53 trillion market cap for Bitcoin and a price north of $2.5 million per coin. Even under more conservative assumptions, the convergence still happens in the early 2030s, because it's not just about Bitcoin's growth, it's also about gold losing market share. As investors recognize that Bitcoin is scarcer and easier to settle than gold, capital will flow from one into the other. Gold supply will always expand, Bitcoin supply never will. That's the fundamental difference, and once the market fully prices that in, the world will be living under a Bitcoin standard. The question isn't whether this happens, it's whether you're positioned for it before the rest of the world figures it out. That's all for today's video. Thank you so much for watching. If you enjoyed, make sure to like and of course follow for more and reshare so more people can see this. And check out Horizon. Horizon lets you stack Bitcoin using your home equity without debt, monthly payments, interest charges, or term limits. You can check that out at joinhorizon.com or by scanning the QR code right there. That's all for today's video. Thank you so much for watching. I'll talk to you soon.